Hey everyone, it's Julie here with TipRanks, and today we're taking a look at recent stock purchases from a top-ranked hedge fund manager. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at recent activity in the portfolio of a top-ranked hedge fund manager and a few stocks that they've been scooping up more of lately. We're going to take a look at these companies, what it is that they do, and how Wall Street weighs in. Just a reminder that tomorrow is Thanksgiving, so I'm wishing you all a very happy holiday. The stock market is closed tomorrow, but will be opening back up on Friday, though closing early at 1 p.m. for Black Friday. And there is still time to take advantage of TipRanks' Black Friday sale, where you can get 40% off TipRanks premium subscriptions. So if you've been wanting to unlock some fantastic investment research tools, now is the time to do so. Follow the links in the description down below or head on over to the TipRanks website. Now to find today's stocks, I was looking under the top hedge fund managers page. Found under the top experts menu, here we can see a listing of the top ranked hedge fund managers. We narrowed in on John Kim of Night Owl Capital Management, currently ranked number 4 out of nearly 500 hedge fund managers. Their hedge fund has a net worth of about $731 million, and over the last 3 years has annualized gains of 45%. Their top sectors are technology, communication services, financial, and utilities. When we look up at the portfolio activity here, I then sorted by holding change to see which stocks he's been scooping up lately. And just before we jump into those stocks, this is a friendly reminder that if you enjoy the video, make sure you hit that thumbs up button and that you're subscribed to the channel. Let's take a dive right into these 3 hedge fund stocks. First up, we're taking a look at GE Aerospace. They trade under the ticker GE, currently priced at $181.50. This is a stock we've touched on several times over this past year. In the last 6 months, they've gained 8%, and in the last 3% are up just shy of 6%. GE Aerospace is what remains of General Electric after the company split into 3 different entities in April of 2024. GE Aerospace is now a leader in the aerospace industry. GE Aerospace designs and manufactures jet and turboprop engines for commercial, military, business, and general aviation aircraft. They also produce aeroderivative gas turbines for marine applications and integrated systems for aircrafts, including avionics, mechanical, and integrated power systems. They also have a services segment offering fleet services, engine maintenance, and aftermarket support. During the last quarter, Night Owl Capital increased their position in GE Aerospace by over 7%. Bringing the value of their position to nearly $26 million, which makes up over 3.5% of their portfolio. On October 22nd, they did share their Q3 earnings report, where we did see mixed results, with an earnings beat but a miss on revenue. However, they did come out with better than expected future guidance. They reported Q3 earnings per share of $1.15, beating expectations by 1 cent per share, while revenue of $9.8 billion did grow 6% year-over-year, but missed by $440 million. Their total orders grew 28% to $12.6 billion. And just over a week ago, we did have a 5-star analyst from Jefferies reiterate their buy rating. Their rating was based on several key developments that signal robust growth potential, one of them being Lufthansa's consideration to switch to GE's GEnx engines for its Boeing 787 fleet, as well as their strategic partnership with United Aerospace Maintenance Company to expand their service offerings, as well as their collaboration with Microsoft and Accenture to develop AI solutions for aviation maintenance. The GE stock does have 11 current analyst ratings, coming in as a unanimous strong buy. And analysts' average price target of $211 would imply an upside potential of 16.5%. Looking at those ratings down below, our low-end price target is $190 from JP Morgan for an upside under 5%, while our high-end price target is $235 from Deutsche Bank for an upside of nearly 30%. The second stock that Night Owl Capital has been buying more of is Broadcom. Trading under the ticker AVGO, they're currently priced just shy of $159 per share. In the last 6 months, they've gained over 13%, and in the last 3 months are up slightly just under 1%. Broadcom is a technology company that offers semiconductor and infrastructure software solutions. Their semiconductor products include data center switches and routers, cable modems, wireless connectivity solutions, and more. Last year, 79% of Broadcom's revenue came from its semiconductor products, while the other 21% came from their infrastructure software products. That includes enterprise solutions for building, connecting, managing, and securing digital environments. Night Owl Capital increased their holdings in Broadcom by nearly 4% last quarter, bringing the total value of their position to just over $20 million, making up for about 2.8% of their portfolio. Broadcom shared their latest quarterly report back at the start of September, and their fourth quarter will be coming up on December 12th. For that third quarter, they did have an earnings and revenue beat. However, fourth quarter guidance fell a bit below expectations. For their fourth quarter, analysts are anticipating earnings per share of $1.39. This follows their third quarter earnings per share of $1.24, which beat expectations by 2 cents. Revenue came in at $13.07 billion, which did beat expectations and grew 47% from the prior year. For their fourth quarter revenue, they're anticipating about $14 billion, which was slightly below analyst consensus. In October, we did hear from an analyst at Cantor Fitzgerald who increased their price target on the Broadcom stock. They said they see a tale of two classes in semis, those levered to the traditional semi cycle and those levered to the secular AI story, adding that at the same time the fundamental backdrop has deteriorated over the last few months. The firm's vision of an elongated cycle remains well intact, and Broadcom is a favorite in AI. With 25 current analyst ratings, the stock does come in as a strong buy based on 22 buy ratings and 3 holds. And with an average price target of $200, that would imply an upside potential of over 25%. Looking at those price targets down below, on the low end we have $170 from UBS, which would be an upside potential of about 7%, right next to our high-end price target of $240 for an upside of over 51%. If you've made it all the way to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Last but not least, we're taking a look at Union Pacific. They trade under the ticker UNP, currently priced at $246, having climbed nearly 9% over the last 6 months. They are slightly red, down just 2% in the last 3 months. Union Pacific engages in railroad and freight transportation services. They are one of America's most recognized companies, connecting 23 states in the western 2/3 of the country by rail, providing a critical link in the global supply chain. They ship a variety of products, including agricultural products, automobiles, chemicals, coal, and forest products, and imports and exports container traffic through the West Coast ports. And during the last quarter, Night Owl Capital increased their holdings by 3.3%. Bringing their position size to about $31.5 million, making up 4.3% of their portfolio. They shared their third quarter report on October 24th, and while earnings and revenue did both grow, they did both fall short of analyst expectations. Their third quarter earnings per share of $2.75 did fall 3 cents short of analyst expectations, while revenue came in at $6.1 billion, which did grow 3% but missed estimates by $50 million. They said they anticipate fourth quarter results to be consistent sequentially from the third quarter while improving year over year. Following that quarterly report, we did hear from a 5-star analyst at TD Cowen. They noted that the company's Q3 performance aligned with their expectations, demonstrating strong top-line growth and significant increases in car loadings. This volume growth indicates a strategic shift in freight towards the West Coast, suggesting resilience and adaptation to market demands despite challenges in pricing and mix. They also noted the company's strong cash flow has allowed them to engage in stock buybacks, further solidifying confidence in the company's financial health. Union Pacific has 17 current analyst ratings, coming in as a strong buy with 13 buys and 4 holds. And the average price target of $263 would imply an upside potential of about 7% from current prices. Looking at some of these ratings down below, we have a mix of analysts increasing or decreasing their price targets here. Our high-end price target is a recent one from Barclays at $285, which would be an upside potential of nearly 16%, while our low end is a hold rating here from Morgan Stanley with a downside of 12%. So that is a quick look at 3 stocks that Night Owl Capital has been increasing their positions in lately, and all come in with a strong buy consensus from Wall Street. Let me know your thoughts on these 3 companies in the comments down below. I always appreciate hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what Wall Street's up to. So please make sure you always do your own research and due diligence. Thank you guys so much for watching. I hope you have a very happy Thanksgiving, and I'll see you back here next time.